Ladies and gentlemen, welcome back to the channel. We have huge Tesla stock breaking news that nobody is talking about, which is like literally the story of our lives at this point as we gear up for the launch of the Robotaxi coming on June 12th. Ladies and gentlemen, we have some news as well coming out of the Pentagon. Pete Hegseth, he says that we're ready for war with China. That sounds like a good headline for the morning. We also have the EU that is vowing retaliation for US tariffs. All of this and much more with a rundown of your Tesla stock breaking news and what's coming next for Tesla specifically. As I've talked about in previous videos, I just want to get this out there because I've been thinking a lot about it. Okay, it's just constantly in my brain. We talked about this in the last video. This is the accumulation phase for Tesla. Ask yourself, 10 years from now, is Tesla going to be a bigger or better company than it is today? Are humanoid robots going to be around? Like, are people going to actually know about them? And the answer for anyone that does not know is yes. Why the birth rate? Birth rates are at unsustainably low levels. Optimus is not a matter of want. It is a matter of need. And if you realize this now and prepare for it, you're going to make a lot of money. I think Tesla stock's going much higher into year end. I believe Tesla could be an over $600 stock by the end of this year. But that's the tip of the iceberg when we're talking the next decade. As it says in the Bible, as you sow, so shall you reap. This is your sowing era. This is your planting era. Trees do not grow overnight. People do not get rich overnight. That is fantasy land. And if you want those outcomes, you gotta sow today. I'm not a financial advisor. I'm not a financial planner. Just a nut job on YouTube. Let me know your thoughts on all of this down below in the comment section once we are finished. And let's get started. Let's start here. Not the most, not the largest news today, but let's start here. The New Jersey Turnpike Authority chose one charging company for the Turnpike and won't allow Tesla to co-locate. As a result, 64 Tesla superchargers will be shut down. Tesla had planned ahead and built 116 chargers nearby to avoid service issues. Tesla offered better service terms and upgrades, but was rejected. This decision limits charging options and hurts New Jersey's EV goals. Tesla has reportedly leased a 300,000 square foot building near Giga, Texas. Wow, and look at this. President Trump gifts Elon with a key to the White House as a thank you for his Doge work. That's pretty damn cool. Wow. Okay, now this is the big news today. Elon Musk is pushing lawmakers to help clear a path for driverless vehicles. This is the big hurdle. This is coming out from Bloomberg. It says Musk lobbies Washington to clear way for self-driving cars. This is the number one hurdle for Tesla. By far. It's not the software. It's not blah, 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 any other thing that anyone's going to say. It is regulatory. Okay? That is the big hurdle. The issue is as well, when there's so many barriers, it's like, each city is going to have its own different requirements or rules. If they don't already, they will. Getting ahead of this to make it possible for Robotaxi to expand aggressively is what Tesla has to do. This is Elon taking charge of Tesla. This is an Elon that is back at Tesla. Okay? Even to that extent, you could say Elon working in the government, now having way more connections in the government than he did previously, is a massive positive for Tesla. We talked about this before. Everyone was concerned about brand destruction and brand damage and short-term noise. The long-term, goal here was to get in everyone's, from a political perspectives, good grace, or at least the ones that you need, okay? This is what you have to see to be able to expand Robotaxi, okay? The difference between Tesla being a $1,500 stock next year and a $700 stock next year is the scalability of Robotaxi and obviously the development of Optimus. Okay, I think the next 18 months, 6 months, the rest of this year and all of next year is going to be a lot less about vehicle deliveries and a lot more about AI. Let's be honest. I think deliveries are going to become a lot less important for Tesla. Kind of like you could say Apple. Like, sure, iPhone numbers, they're important, but people really care about services. Okay, that's what really matters for Tesla at this point is how do we scale Robotaxi? If Robotaxi enters 20, 30 cities, 40 cities next year because of this, because of some of the deregulation, the path towards that becoming clearer, then that's going to be huge for Tesla. Tesla can have the best software in the world. If cities don't allow it, there's nothing you can do. That's why, again, I think this is the time to sow. This is the time to solidify your future fortune. Elon Musk commented on this New Jersey Turnpike Authority, like shutting down Tesla's plans for expansion. And Elon says, sounds like corruption. Now, as far as Tesla stock on Friday, you had very positive option activity from hedge funds and institutions. So forget what Tesla stock did on Friday. Tesla was down 3.34% in regular trading, down another third of 1% in after hours. Forget that. Look at the option positioning. That is future positioning for next week, next month, next year. Okay, the option activity was very bullish from hedge funds and institutions. You had 327 different trades totaling $299.86 million, almost $300 million, with a positive order value of 83%. What that means is if you had a $100 bill, okay, let me show you for visual reference here. If you had a Benji $100 bill, okay, that means $83 of this went towards positive positioning, upside positioning in Tesla. That could be buying a call or selling a put. People think the stock's going higher. Okay. Well, what? 17%? Almost said 27. 17% of this $100 bill, or $17 of this, almost an insignificant amount, went towards downward positioning, like buying a put or selling a call, positioning for the stock to go lower. Hedge funds and institutions were pretty damn bullish. And if you look at last week, 70% of all option activity, or $70 of this $100 bill, was upside positioning, and $30 of this was downside positioning. When you put that into perspective, that's really good, especially when Tesla did not have the greatest week last week. In total, over the last week, you had 1,526 different options trades from hedge funds and institutions, totaling $1.63 billion, again, with a 70% positive order value. Now, if you look at Friday, you had 90,000 shares on net that were sold short. Who cares? But the overall amount of shares sold short continues to climb. You have 3.04% short interest of free float, $30.55 billion sold short. Over the last 3 months, this is up 70%. So part of that has to do with short sellers, shorting more shares, but part of that has to do with the share price of Tesla going higher. So short sellers have lost more money in Tesla stock than any other stock in this recovery we've seen so far in the markets. More than Nvidia, more than Apple, more than, companies that are 3 times the size of Tesla, right? Or more in the case of Apple and Nvidia. That just shows you how short people are in Tesla. 85.23 million shares are currently sold short. So, it's only a matter of time before the short sellers get squeezed out of short positions, especially heading into June 12th with a successful launch of the Robotaxi, which I'm sure Tesla's going to make sure that's going to be successful. It's only a matter of time before short sellers get absolutely screwed in Tesla. And Tesla, I believe, will be a $600 stock by the end of this year. Pretty easily. Now, in the news today, this morning, the EU Commission spokesperson says that the EU is ready to impose countermeasures, including in response to the latest US tariff increases. And again, it says the EU is ready for retaliatory actions against US tariffs. The EU Commission spokesperson says, "We strongly regret the announced increase of US tariffs on steel imports." EU Commission spokesperson says, "The tariff increase also undermines ongoing efforts to reach a negotiated solution," which is true. I mean, it'd be like if you were trying to avoid a fight with somebody and they punched you in the face. What choice do you really have? So in all fairness, I mean, the EU's not wrong here. Also hitting the headlines today, Canada's jolly responds to US tariffs with retaliatory actions. Canada imposed a 25% tariff on $155 billion of US goods, starting with $30 billion on March 4th. So they're kind of just reiterating like that they've already taken some action. Now, Donald Trump says that Chinese students coming to the U.S. will be fine. He says that Pakistan representatives are coming to the U.S. next week. Trump says that Japan wants to make a deal with the U.S., but that he has yet to approve a final deal with Japan. And Donald Trump says that the United States steel will remain under American control. Fed Daily says that April's PCE was a good relief, but incomplete as a picture. Trump says that US cars would be made with US steel, and he is urging supporters to encourage senators to vote for the tax bill. He also says we are on the brink of passing the biggest working class tax cut, which again, I would say a good chunk of this workforce, especially lower income earners, have been in a recession for 3.5 years. Getting them some relief, like no tax on tips, no tax on overtime, if that can go through, is going to go a long way in helping this economy actually recover, like the average working person to recover. Now, I'm going to share with you this clip from CNBC yesterday. It says equities can return double digits in the second half of this year, says Wells Fargo's Chris Harvey. This is something I really need everyone to understand, okay? Wall Street is only focusing on what could go wrong right now. They're not focusing on what could go right. And I think there's a lot of things that could go right, including the tax bill. Yes, we already know about the deficits and blah, 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 and the debt and all of that. But they're not focusing on the 70 million, U.S. Americans that could start to come out of a 3.5-year long recession with the tax bill. They're not thinking about what trade deals could actually do to company earnings. I'm sure both of those things in the end will be a positive. They're not considering what trade deals could mean for inflation. They're all worried about inflation. We may not see inflation. We may see stronger economic growth, specifically coming from AI and enhancements in productivity. Okay, nobody is thinking about that. And as some individuals like Tom Lee and Ryan Dietrich have talked about, next year looks like it should be really good. What a lot of Wall Street forgets, it's not about right now. Things could be bad right now. Theoretically, they could be terrible right now. If Wall Street starts to assume that next year is going to be a good year, that's what markets recover on. Markets are forward-looking instruments, okay? And I think as we get deeper into, this year, second half of this year, Wall Street's going to start to realize, oh crap, next year is going to be a good year, so we should invest in markets. Wow, like crazy thought, right? And that's what you need to position for right now. So take a listen to this clip.
Market participants as well. Our next guest tells us today tariff risks are priced in, if not overstated. Here to discuss, Chris Harvey from Wells Fargo Securities. It's good to have you back, especially as we have these new headlines. What's your reaction given your own headline today? That this is all priced in?
I do think it's priced in. You're going to have volatility. We're having that volatility. But at the end of the day, we're making progress on trade and tariff. We'll continue to make progress on trade and tariff. We'll take a step back every once in a while. Today, we take that step back. But as you can see, things didn't really stick. And the Trump administration does want to move things forward. They appear to want to push the ball forward, and I think that's a positive. We're now at the point where I think we're going to start to hear some real tangible results over the next couple of weeks.
You've been steadfast in your belief that this market can have a good second half.
Yeah.
You refuse to move down your target, which I always cite, and you always smile when I do, because it's 7,007. It's by far the highest on the street. And you think that something close to that is still possible or not?
Yeah, I think so. I think we could see double digits in the second half of the year. I think one of the things that really surprised me in recent weeks was what Waller said. Waller comes out and says, hey, if tariffs are only 10%, we can start cutting rates. Tariffs are more than 10%, we're going to have a problem. That was a really interesting statement. And I do think that's where tariffs end up, in a 10-12% range. That was our initial thought, and we're getting more and more comfortable with that belief. And if you hear him, if you believe what he has to say, that's really constructive. And at the end of the day, when we talk to clients, when we talk to people, they're fearful of a lot of things, but when you push them on the fundamentals, they're like, hey, the fundamentals are okay.
You describe, that suggests the president can have his cake and eat it too. He can have his tariffs at 10% and get the rate cuts that he's been pining for. And maybe he did when the Fed chair himself was sitting in the White House yesterday.
I think so, right? So the reason why we said 10% is with 10%, we think about a third will be eaten by the importer, a third will be eaten by the corporation, and a third will be eaten by the consumer. That's not a big impact. And what's really interesting is now you're getting revenue, now you're having revenue that can start to balance the budget. That's a real positive, real constructive thing. And we'll start to see the benefit of that as we go forward in time.
What if China doesn't back down? What if they don't want to do a deal as fast as you think maybe the White House needs to?
I don't know. So I think it's more important that we get deals on the table with India, with Japan, with the EU, and
more
North
important
America.
than China?
Yeah, I think it's more important than
Why?
China. Because what we're in the process of disintermediating China, right? And what we're saying to our allies is, if you want to win, if you want to enjoy the spoils of that disintermediation, then play ball with us, right? We're not going to stop doing business with China, but we really want to. The administration is trying to make it very difficult to do business with China. And when we listen to the conference calls, you are hearing companies say, hey, we're removing our exposure to China. We're moving business out of China. It is working. They are making progress in that endeavor.
What's the rub down? I mean, what potentially upsets your narrative?
What upsets my narrative? Really simple. One of the things that we keep saying is, if you don't know, you know, right? The uncertainty is still gnawing away and still eating at people. If we're here in June, July, and we're still saying we're not sure, we haven't had enough progress, then you know. And then people will start to say, hey, maybe we need to resize our workforce. You start seeing a resize in the workforce, then things start to fall apart.
But you actually think that by June, July, we could have enough clarity on the trade front that we can focus on tax cuts, dereg, and all the other stuff that's supposed to be stimulative to the economy?
Well, I think we're already focused on tax cuts. We already have a good understanding of what's in there. There's a lot of talk, and I don't think it's going to be done by July 4th, but there's talk about it being done by July 4th. I think you have to have some progress with trade and tariff. If you make that progress, and if it's of size, again, if you see in Japan, if you see in India, then you can start to extrapolate out. Then the market starts looking through things. They start looking through any sort of economic slowdown or weakness, and then we start looking to 26, not at 25.
Wow, that clip was even better than I thought, because my year-end price target on the S&P is 700 on the SPY. So is his. I think that was the most logical take on markets I have heard in a very, very long time. So let me know what you guys think about this down below in the comment section. Have a great rest of your day, and I will see you in the next one.